All right, traders, welcome to today's end of day video. This is Christian from Tribeca Trade Group, and it is Thursday, October 19th. Sorry, I'm all messed up here because I forgot to turn the video on here. There we go. There it is. So yeah, obviously a lot of red, continuation red on your screen, on my screen. I will go through and just talk about some observations. For now, that's the best that we can do. I try not to be too negative when we've got like a pretty, another spill lower like we've, like we're experiencing right now, and a very heavy tape in terms of news too. But I'll go through a couple of things here. Yeah, we'll talk about bonds first. By the way, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So let me go through and I'll talk about bonds first. I'm so tired of talking about bonds, but this is what's driving the market, and I wish it wasn't the case. But it is. It is the case, and it's affecting what's going on pretty decently. Yes, all this, it seems like every day I hear about, oh my God, the 10-year going to 5%. Look at all the maturities. First of all, what's kind of interesting is the 2-year and the 3-year, the yields were actually down today. So you had kind of some steepening go on here. But look at the 20-year. So I think people are waiting for like something magically to happen once the 10-year gets to 5%. I'm not in that camp because the other maturities are already past 5. So I don't know why there's so much significance based on that. I guess it's, a lot of times there are psychological levels in the market where people are looking for things for a potential, area of change. Maybe thinking that once the 10-year gets to 5, then it starts to move the other way. But I don't know what's going to change it at this point. We heard from Powell today, and we really didn't get that much of a change. I for one was actually looking for him to say, for at least someone to kind of come out and say, this is not good considering our overall debt levels. We've never had a national debt like this. I know Zero Hedge, has been retweeting like every couple of days what the national debt is at, and we're getting close to 34 trillion at this point, and it's like we're rolling over, like it's becoming like a trillion, a new trillion, like every couple of weeks or a month, the way it is. And you just have to think about, and I think that's what's spooking a lot of people is you look at yields continue to go higher, and how, if these yields continue to go up, how is the country going to be able to fund itself? And we heard from we heard from Powell today, and he was very doesn't seem to be worried about the situation. I know a lot of them are looking at different things, and inflation. And I think he said inflation was still the number one priority, but I'm getting I've been getting concerned, as well as many other people are, just what they think is going to make this stop. This selling that we're seeing in bonds, because I don't think there's many mechanisms to do that. And I don't know how we're going to continue to, like, if there is going to be more quantitative easing at some point. I don't know how that's going to be paid for. But in any event, I think this is what's weighing on the market is a lot of people are coming to the conclusion that this is becoming an ugly picture. But it is what it is. So let's go. So anyway, that's a little bit of like what I'm thinking about. And like I said, I'm not the only one, but we did not hold here. I thought that we really had a chance with this last virgin point of control being taken out on the daily and on the weekly. But as I mentioned, with these virgin point of controls, it becomes like a battleground of buyers and sellers. Here's the weekly chart. And if the sellers overwhelm the buyers, price will go past them. So that's what you have now. And I'm just wondering what's going to change this at this point. Yes, we are oversold. So maybe we get another bounce there, and maybe that helps stocks a little bit. But is tough sledding right now with bond yields. Let's talk about what we're seeing in equities, and we'll talk about risk management here. So number one, if you look at the percentages at this point for the year, or excuse me, not for you could look at them for the year too, because I noticed I have that on the top of my head, because IWM is now down again on the year for the year, right? Qs, are still up massively for the year, up 35%. But it's just kind of crazy to see, and this might be off a little bit, the way that Excel is calculating this, but regardless if it's 2 or 3%, I calculated by manual, and I think it's about 2.5% is what IWM is down. But looking at the month, the Qs are still up barely for the month. And the reason why I laughed is because just looking at the price action of what we've been experiencing, you would think that we would be down, somewhat to what the mid caps and the small caps, which are down well over 3-4% now month to date, and SPY is now red for the month. Yes, S&P is still holding, my level, right, 42.57, but we're looking more and more vulnerable. We've also slipped below, so these are, what really, I use the value areas for is to say, okay, like to get a grasp of whether or not we're holding support. And then I can make decisions based on that. Sometimes I wait a little bit longer than I should, which I did today, because I really, like I said, I was wrong. I thought Powell would come out and maybe change his tone a little bit, but he didn't do that at all today, and that's the reaction that you have. But the other person who I was going to mention too is Janet Yellen was in an interview, and just so nonchalant and saying, oh, I don't think it's that much of a concern. We can fund wars and so forth. I would like to see the models that they're looking at. For instance, like what happens if the 10-year gets to 6% or 7%? How much will tell me your predictions about the debt, and because what will happen, right, if this continues to get worse, is the credit agencies will downgrade the United States, and that will cause a snafu in the market. So that's why these things are important. I remember when the S&P downgraded the United States, a few years back, and the market really slid on that. Equities, really did that. So if somebody doesn't start to talk about this stuff pretty soon, I've just again, I'm concerned about the path that we're going on. But regardless, this is just opinions, right? This is my opinions. What I do have is levels to watch. So we broke briefly. We broke into the value area for the month, and we are now spilling lower here. So again, we'll see if we hold. Again, I'll give you this level again. It's 42.57. That's what I would like to see us hold. Last time we checked into this, and we held it quite neatly, but there's no saying that that doesn't need to hold. Qs, which again I've been watching a little bit more closely, because I actually like the Qs better, because you've got Apple, which is a big weight, and Google, and these names don't have a lot of debt. Right. So, and it's already been refinanced, and they've done a good job at that, and they hold a lot of cash. I've got a nice level for the Qs to watch, 359.91. I've talked about this in these end of day videos, that a lot of charts look like this, where we failed to make a new high. So we made a lower high. So far we have not taken out these lows, so we're kind of hanging by a thread here. The other thing to note too, is we've taken out that lower VPOC that just happened like right at the end of the day. So again, I don't know if we're going to bounce there, but we've come all the way in. Remember, we talked about, there's been a couple of things that have been pretty, I think, particularly tricky about this market. And if you've gotten it right, playing it to the downside, congratulations to you. But I thought that this looked like a head and shoulders top, but we only went so far, and we bounced right kind of back into here. The main thing that I noted yesterday was that we broke all three of the indices broke their value area for the week. So this would be a great place for the market to kind of take a stand. And we'll see what we get tomorrow with options expiration. But you could see we're just, the other thing that I notice before the kind of the day establishes its direction is that that price just cannot get through any short-term resistance, right? I mentioned like we crossed over this bottom of value, because normally what I would look to do, like when we start flat for the day like this, or close to flat, right, and we break into the value area, like I'm a buyer on that. But I didn't do that. I just kind of watched, and I felt like I missed a little bit of opportunities because I saw people buying the lows, and it was a very good scalping day for the first, until Powell was done speaking. Once he was done speaking, and the market kind of realizing that he didn't say anything new, and we just kind of continued in the prevailing direction. But yeah, we're any little resistance right now we're running into, we're getting rejected, right? And I talked about this as well with the 1 hour chart for S&P, which has a VPOC lower here. But we failed here Monday. We failed here on Tuesday. Right where we needed to kind of break that short-term resistance, right? And then it's been a slippery slope thereafter. So those are the main things that I kind of begin to watch. When we have the VIX doing what it's doing, my emphasis kind of drops on single name stocks because the correlations pick up, right? Another thing too, I was mentioning this in the trading room at the end of the day, is if you're trying to trade options in this market, right, you'll notice that option premium will start to get more expensive. Now, if you're holding calls and you're like, geez, my calls actually held some value today, even though the market was going down, that's because of option pricing, right? If you're trading options, you should know. You don't have to basically know. You don't have to do the raw calculation in Black-Scholes. If you do, that's great too. But you just need to know a little bit about option pricing, right? And you could Google the Option-Scholes model, because if you are trading any options, it's mandatory, in my opinion, that you know what theta means, right? You know what how volatility affects your options price, right? So volatility goes up, your option price goes up. So that's probably why, if you noticed, I had a couple of people mention that they're like, "Hey, my premium's not, for whatever reason, it's not going down that much." Well, it's because the VIX is up 10%, 11% today, right? So it's going to affect the pricing of your calls, and it's going to make calls and puts more expensive, right? Because of that volatility component that's in options, right? And again, anything that I ever say in these videos, you could Google, and you could look for yourself. But it's important. I always I'm surprised when I hear people don't know how to price, don't know the components of option pricing, or they don't know how to delta hedge, right? Meaning selling stock or buying stock versus their option position. Like, these are all things, like, they shouldn't give people the keys to be able to trade options without knowing some of the basics. It's like getting behind the wheel of a car. You have to get your driver's license. You should be taking some type of an options test before you actually trade any options, right? They sound great. They give you leverage. You could buy for cheap, and if it moves in your direction, it works really well. But you should really know the basics of some of the mechanics. So in any event, I talk about these when the VIX isn't doing much. I don't talk about this much, but when the VIX is up 11%, right? Because again, if the VIX goes down 11% tomorrow, what do you think will happen to your options? Right? They'll go down in value very quickly. Okay, so all right, so that's it, I think, for today's video. Again, I tried not to be too negative, but bottom line is it is what it is. And if you're using stop prices, I mentioned that I kind of waited an extra day. I didn't like how things finished yesterday, but I held on to some positions. I try to buy the dip in a couple things, and ultimately, once things break support and hit my stop price, I'm selling, right? Because in that case, I can only I'm capping my loss, right? And it's not fun, selling your positions when the market's going down. Sometimes you want to be doing the other thing, right? You want to be accumulating. But if we start to really break, there's a difference. Buying the dip when we're into some support is one thing, but buying the dip when we're breaking down is not for me. And let's just look at the raw numbers before we end for the day, because like I said, by the way, look at some of these names getting hit after hours. SCDG had bad earnings; they're down 18%. So as we're going to get a big week of earnings ahead. KNX had good earnings; they're up 14%. But we're going to get a big week of earnings, and that could also be a catalyst for next week. But one other thing that I mentioned in yesterday's video, I believe I mentioned it in yesterday's video, that there's too many people thinking that the October seasonality is going to save the market, right? We knew that October is a better month for stocks generally, but when everybody's all on one side of the fence and believe something, many times it doesn't come true. So just be aware of that. I've been erring on the side of holding more positions because of the October seasonality, but we begin to break down. I'm not, I really move away from that. All right. I mentioned, breath. This will be the last thing that I go over here. We started, yesterday was the first day that I've really seen more new 4-week lows than highs. Look at today, 127. This is just the SPX, by the way, 127 new lows and only 20 new highs today. So, all right, guys, that is it for today's video. Have a great night. See you tomorrow.